Hey there, YouTube family. Welcome to the Stocks with Josh show. I've been gone the last couple of days, and so I'm going to try to catch you up on what I've been up to, what my trades have been, and what I see going on in this market. Basically, the Fed came out yesterday with a 75 basis point rate hike, and the markets went up. And then he started giving his talk, and the markets went up. And then he started answering questions, and he basically came out and said that there is a ways to go. He shattered the idea that there might be a pivot coming. And he basically said, we've got a lot farther to go. We need to drive inflation down. Prices are too high. The economy's hot. Things are not slowing down. And then right after that, we got some factory order reports that came out and said that they're rising. We also saw that some jobless claims were falling. And so the Fed is right. The economy is still strong. I made this point the last time I compared the current economy to the Great Recession of 2008. They had all of the reports were coming out bad. Can you imagine at that time, more and more bad reports were coming out, bad earnings were coming out, and so the market just kept going down and down and down and down. We're dealing with the opposite. Right now, we're dealing with inflation. We're dealing with a Fed who's trying to hurt the markets. He's trying to slow down the markets. And every single time he raises rates, the markets have to go back and recalculate the impact of those increased rates on companies. So we've got no pivot appears to be happening anytime soon. Back when we were at June's lows, the market was expecting a terminal rate, which means a final rate. They expected that in February to be 3.5. Right now, we are well above that, and the Fed does not intend to be slowing down. So we really don't even know where the terminal rate's going to be because he's still hawkish, and we don't have a clear idea of a pivot. But what is ahead of us? Well, we know that up tomorrow is a new jobless claims report that's coming out. That's going to tell us what the Fed is looking at. So right now, the Fed keeps saying that he's okay with job loss, whatever it takes to bring inflation down. Well, inflation is up in the 8s, and he wants to bring it down to 2. And he has said that it's okay with him if we lose 2 million jobs in the U.S. so that he can accomplish his goal and actually address inflation. When the economy gets used to just paying high prices, it just stays that way. Prices don't ever drop. I mean, back in the day, you could probably buy a loaf of bread for a nickel and, it just kept going up and up and up. It never goes back to a nickel. So when the economy gets used to the cost of goods at an inflated rate, then they just don't go down. But there's an opportunity right now to go back in some of the pricing if the Fed just goes super hawkish and pushes the price back down before everybody gets used to it. That's the problem. So that's what he's trying to deal with. So last week I talked with you guys about trading Meta. I told you that I was going to be looking at a position, but I also told you that if it dropped below $97, I wouldn't touch it. It just blew right below $97, so I haven't touched it. But now I have my second target in mind, which I believe is going to be $86. I will look at taking a position again at $86. I am looking for a bounce up. Now, my ideal entry for Meta is $80. I am not suggesting that any of you guys buy, sell, or hold this stock. I'm just letting you guys know what I'm doing. I'm looking to pick up a short trade. Meta is not right now a long-term investment. It's not over in my retirement account. It's not a value stock for me. It is just an ideal swing trade for me, and I'm looking at some support levels. I see support at 86. If it doesn't hold, I will try again at 80. Over on my Baba play, my Alibaba play, even though the markets have pulled back and a lot of stocks have been getting punished and making new 52-week lows, Alibaba held up pretty well today, and so I'm looking at adding to my position tomorrow morning. All right, and then we have Google. You guys know that that is over in my retirement account. That is a value long-term investment play for me. I'm also looking at doing some call options on Google. It's come down really nicely, and I'm looking for a potential reversal in this market. So what ahead of us could give us the reversal? Well, sometime back, I told you guys that the midterm elections could produce what I called the gridlock rally. The market's just looking for reasons to go up. I don't believe that we have enough data to go extremely lower. I don't see the next leg down occurring right now. I just don't think the data is there to support it. So I do think that we're going to sort of vacillate in this current range before the market gets the data that it needs to justify a massive sell-off. And so the gridlock rally may give the market an opportunity to go back up a little bit. That is November 8th. If the market takes off on the gridlock rally, then right behind that on November 10th, we get the new inflation data report. It might be reason enough for us to go back to the pivot narrative. It may calm the Fed down because we know that's what he wants. He needs to see inflation reversing. And when inflation begins to reverse, then he could slow down on the interest rate hikes. And that's all the market wants. They just simply want him to slow down and be more predictable on the interest rate hikes. What I also want to cover with you guys is crypto. There was a really big news story today where 401ks were getting positioned to begin to invest in cryptocurrencies. If that news story had hit during the last bull run in crypto, it would have just caused Bitcoin to jump up 10K. But right now we're in the bear winter, and so we're really not getting these great news stories priced in. So basically, Bitcoin looks like it wants to retest the 20,000, and I've told you guys that my buy on Ethereum is 1420. I have been saying for a long time that we're not going to get that 8, 10, or 14K Bitcoin. I've been out on a limb making that prediction for a long time, and I really don't see us going very low right now. I believe that we're then very likely to go up and test 25K on Bitcoin and possibly 2,000 on Ethereum. You guys know that I'm trying to get into Ethereum at 1420. That's my game plan. I'm going to go into the charts today, and I'm going to give you guys some Fibonacci long-term price predictions for Bitcoin, Ethereum, ADA, and SHIB, because I think it's important for us to keep an eye on the big picture. But before we begin, this episode is brought to you by the MooMoo investing app. If you guys want to get 15 free stock on a free-to-trade, no commission cost mobile, iPad, or desktop app, then sign up. All you got to do is put $100 on the platform. It's free to use. You get 16 hours of trading, free level 2 data, plus you get to join the Stocks with Josh community page as well as our group chat. All 15 free stocks have a potential value of up to $2,000 each. The pot is $30K. Check the link in the description of the video and join us. So we're going to start off in the crypto heat map, and obviously we're dealing with an extremely gray day. Gray means neutral, that there is the bears, neither the bears nor the bulls are advancing. The price is sort of stationary. Interestingly, we have one outlier right now, which is Matic, which I think is pretty bullish for Matic. And we also got Crow over here doing pretty good. So we need to keep an eye on those. I also see that NEAR is up. You guys know that NEAR is one of my favorite. I think that's going to be a very powerful coin moving forward into the next bull run. So we're looking at Bitcoin, and if we do a trend-based fib extension and Bitcoin holds this current low of that $17,500 region, it means that we have a future price target of Bitcoin at 82,000. I'm not suggesting that we're going to 82,000 now. I see us hitting a high of around 25 to 26,000 potentially, and then us coming back and testing the 20,000 range. But if we just simply look at this fib trend-based extension, it's giving us the fact that we have a future price on Bitcoin of 82,000. And let's just not lose sight of that. Even if it did drop to 10 or 12,000, if you could pick it up right now at anywhere in this current range, we've got to look at that future price of 82,000 as the goal. All right, now we're looking at Ethereum. You guys know that I sold my position at 1,600. I'm waiting for it to come back to 1,420. I'm going to grab it again. I have long-term Ethereum and I have short-term swing trade Ethereum. Right now, I'm looking at it reaccumulating at 1,420. If we want to do a trend-based fib extension on Ethereum to get an idea of where the price might go, if we pull this to the recent low, assuming that we do not go lower than 876, that means that we were looking at a $6,000 Ethereum ahead. That's important that we keep a target. We have a clear technical target of a $6,000 Ethereum that right now, if we don't go lower than that price of that 893 range, then we likely have a $6,000 Ethereum in our future. Okay, now I'm looking at some ADA, some Cardano. We're going to do the same exact thing. We're going to look at a trend-based fib extension. If we go from the last low to the last high down to our current price, which we know that it recently hit 90% down, which we know is a typical bear winter pull back a full 90%. That gives us a $3.88 target for Cardano. So here's the point I want you to keep in mind. On ADA, if this 90% down move from the top down to this 32 cents was the complete low, that means if ADA survives bear winter and it continues to pump in the next bull run, we are looking at a $3.88 target on ADA. All right, now we're going to do SHIB, Shiba Inu. If we do a trend-based fib extension and we go from our previous low to our recent high back to our lowest price, we are then looking at dropping a couple zeros. We're going to get to a 0.00014166, which would be a massive move up for SHIB in the future. That's our target. And again, so our goal is that if this low was the 50764, if that remains our low, then we have the potential of booking a 0.0014 price in the days ahead. You know, I believe that we're going to go back up and we're going to retest some of the recent highs that we made in cryptocurrencies, but I don't believe that we're just going to continue up from there. I believe we're going to make another run up and another attempt at 25K, and then I think it's very possible for us to come back and retest the 20,000 range again, and I believe at that point that may be the last time. I do not see us going below 17K. That it is possible. I may need to come out and revise my prediction, but right now, from my view of the charts, I just don't see it happening. I think that we're going to go up right now in the coming days. I think we may come back and we may test below 20K for the last time, and then I believe from that point forward, we may be seeing a steady rise or a longer view of consolidation with a trend moving slightly upwards in cryptocurrencies. I hope this was helpful for you guys. As always, peace and blessings, my friends. I'll see you tomorrow.